What's up, traders? Chris Drysdale here, founder of the Drysdale Trading Group. Excited to bring you our next video. And in this video, we're going to be focusing on the trading principles and framework that I focus on for the VWAP Wave trading strategy. If you don't have a framework or a general line of principles that you're following for your trading strategy, you're probably getting chopped up or not knowing why you're getting in certain trades or wondering why you did certain things. It's super important to have this framework in place. For many people that are new to a strategy, they'll even print them out and post them right up on the wall so that they're focusing on their principles that guide each and every single trading decision, whether it's to take a trade or not take a trade. All right, we should always have a plan and know why we're taking each and every trade. Otherwise, it's just random gambling. Okay, so I'm going to dive into my core setup guide. I have 4 major setups, and in that guide is also all of the principles for the VWAP Wave strategy. I'll make that available in the link down in the description for you, where you can download that. Okay, so let's dive into the charts. Okay, guys, so here on the left, this is my core setup guide. This is what you can find to download in the links below. And on the right here, this is just a recent chart. This is NQ from the last couple of days. Okay. And in this setup guide, we have our VWAP Wave principles. All right, I'm going to kind of dive into these one by one. All right, first and foremost, trading isn't an exact science. Precision isn't the goal. We aim for well-reasoned decision making, not perfection. All right, every professional traders know that we can't trade perfectly. All right, the market can be very erratic at times, and we're just never going to get the perfect entry. We're not always going to catch the perfect trade. All right, there's a lot of inconsistencies in our execution. We are not robots. We are not computers. All right, especially as a discretionary trader. All right. So our well-reasoned decision-making is guided by these principles, so we have a framework to operate within, okay? And we also treat our levels as areas, all right? We're never going to top tick, bottom tick these setups to the tick, all right? We're just aiming to grab a piece of the move or scalp for our pockets, essentially, okay? The more you try to focus on perfection and precision, the more you're going to fight a losing battle. The second principle here is the market tends to persist in its current behavior rather than abruptly changing direction. Instead of predicting shifts, we align with prevailing market conditions. We trade based on what we see, not what we hope. Okay? And without this specific principle, a lot of people will find themselves shorting the bottom or buying the top. Okay, because you're expecting or wanting a breakout and it doesn't happen or it rejects. Okay, when we have a framework that guides us, you know, for example, up here in NQ, all right, we might be trying to short here because it looks like it wants to go lower, but in reality, this is the bottom of a distribution. We have our lower VWAP band here, right? So based on our strategy and our setups and our rules, this is a place to go long, not to short, all right? Just because I might want a breakout and get a big move, that doesn't mean what's going to happen. So if the market is currently ranging, we should always expect for it to consistent range, okay? If we're in price discovery, expect for continued price discovery, okay? We do not fade the top. We do not buy the bottom pick, all right? We can expect whatever the market's doing to keep on doing. Now, a lot of people struggle with that because, you know, they'll short after a big move short and it'll reverse and they'll go, see, told you, I knew I should have bought there, right? But the probabilities will tell us that that's an outlier, okay? Just because that one time you managed to buy the bottom or sell the top doesn't mean that's what it's most likely going to continue doing, all right? So we trade based on probabilities of what's most likely going to happen next, okay? And we expect the market to keep doing what it's doing, all right? That's a very powerful rule. The more we follow that one, you'll more find yourself not buying rejection breakouts or shorting bottoms, okay? This simple rule will help you avoid a lot of that. Okay. Next principle. All right. When price holds or re-enters the VWAP value area. Okay. For us, the VWAP value area is the area between the two bands on the VWAP. This is the RTH session. We normally look at the electronic trading session. All right, so that would be these two bands right here. That's one standard deviation. All right, once we're in here, we often gravitate to VWAP. All right, it's a magnet. All right, if it moves beyond VWAP, the next likely target is the opposite end's value band. Okay, so a good example of that would be where we faded this value area extreme. We went to VWAP, all right, that's our magnet. We had a little trouble getting through, but once we were able to break through, the next area of target was the other side of value, of which we returned to VWAP and then the other side of value, okay? Now there's more principles behind this, but we can always expect VWAP to be the centralized magnet. And if we hold these value area extremes, we can always expect a return to VWAP. Trading within the VWAP area is often choppy. Adapt your approach to avoid unnecessary losses and false moves, okay? VWAP, a lot of the time, is not a great level to trade off of, all right? This is considered a point of control, the VWAP. All right, if you're familiar with the volume profile, all right, this is our distribution. The point of control is the price level where the most business was transacted. So the most buyers and sellers are getting in and out at that level. That's why it's choppy, all right? You get a lot of back and forth because large orders are getting in and out. So the VWAP is very similar. This is our point of control. So we can expect big players getting in and out. We can expect trapping behavior. So there's only certain conditions where the VWAP makes sense to use as a level. But for the most part, VWAP should be viewed as a choppy level, kind of like the point of control. Okay. When price breaks out of VWAP value area, it typically seeks to explore new levels in the breakout direction, often targeting prior value zones. Okay, what does that mean? All right, so if we break out of the VWAP value area, we can expect continuation in that direction. Okay. Here's another good example here. All right, trading outside of the VWAP band. All right, we got continuation, price discovery in that direction. Now, where is it going? If we go back several days, it's probably targeting a previous area of value. It could be right here, all right? We've broken through this one, all right? This was a big value area. This was another value area where a lot of business was transacted. So we want to be mindful of the previous few sessions and even more on where price might be looking to establish a new value area. This is all based on auction market theory. And auction market theory tells us that price is either in one of two modes. We're either trading in fair market value, and that's where business is being transacted. That's where you get these big volume nodes, all right? People are getting in and out. And once business is finished transacting in that area, it goes on to search for a new value area where it can stop and start transacting business again and create a new fair market value until it moves again. And this is fractal, so it happens on every time frame. Okay, this is the 5-minute looking at daily charts. All right, you can do this on a yearly, all right, and really see where the levels are for the last year. All right, but this is basically price is always in search of a new fair market value where it can transact business. Now it can do that for 20 minutes or it can do it for 3 hours. All right, make a little mini distribution or make a big fat distribution before it moves on to the next value area. Okay. Not all trades are equal. The highest quality setups emerge near fresh contextual shifts. Okay, this is where the best opportunities lie. Okay, so what does that mean? Okay, that means the best setup is the first time you get to take that setup. When it returns to that level, the probability of that setup working again has now lessened. Okay, So let's say we're taking a price discovery continuation setup, all right? So let's say we're focused on this day, all right? And we're trading, we've broken out of value. We're looking to go long because we're in price discovery, all right? Let's actually change this to electronic trading hours. Okay. So let's focus on this one. All right, we broke out right here, a value area. If we wanted to take a long, that's not a breakout, looking for a pullback, and we got in here close to the band and initial balance high. All right, when we come back to that same area, all right, we didn't get the same trade. Now, maybe if you're lucky, you got a second trade on it. But probabilities tell us that the first pullback is the highest probability setup. So not all trades are the same. The first time after a strong break and a pullback to the band is going to be the A+ highest probability setup. The second time we pull back to touch the band, it is no longer A+. All right, A, B+ at best. Most likely it will not hold unless we have a hugely strong trending day, which is only about 20% of the time. Okay, so something to keep in mind there is that the first contextual opportunity to take a setup is the best. Okay, the second time we take that trade at that same level, you're now trading with lower probabilities and should be waiting for a new contextual shift. What's the next setup that's new that I can take? And then lastly, our last principle, the VWAP Wave strategy provides a structured way to interpret market behavior, but not every scenario can be perfectly understood. Embrace uncertainty where necessary, okay? While this structure and these principles and this strategy are very effective, very profitable, and have very high probable setups, that doesn't mean we can explain why it doesn't work some of the time, all right? With news droppings or earnings happening and we get good news, but the market's tanking and supports aren't holding, we wonder, why can't I explain this? This makes no sense. Who's buying up here? Who's selling down here? Why would you buy this, right? All of that stuff doesn't matter, okay? If it's not agreeing, if the setups are not taking place, all right, if they're not playing out, we need to step back, okay? We can't explain why, and we need to embrace the uncertainty. The strategy works, okay? Just because it doesn't work 100% of the time doesn't mean it's not a good strategy. And that's why we get a lot of strategy hoppers, all right? They'll trade the strategy for a day or two, and that might have been a great day for the strategy. The day it doesn't work, they throw their hands up and they say, this stuff doesn't work. And they start looking for the next indicator or strategy that they can have success with until that one gives them a losing day. And they look for the next, and it just goes on like that perpetually. Right? Losing is a part of trading. And if you can't embrace the uncertainty of taking a losing trade, you're in the wrong business. All right, we need to embrace that uncertainty and let the probabilities play out in our favor. All right, we trade like the casino, not the gambler. Okay, so that kind of wraps up the principles. All right, that's really a high level. And now I'm going to dive into our setups. Okay, and we really don't need to look at a chart anymore. I'm going to put this on full screen. We can zoom in a little bit. Okay, so setup number one is going to be the price discovery continuation setup. Okay, this is when we're moving out of value and price is now in search of a new value area. Okay, the best places to go long are off of value area high. In this case, in the upper VWAP band, we look for the break. The acceptance, okay? By acceptance, we're looking for time or distance outside of the band, all right? We're not generally looking for the first break, okay? We need to accept that we're now in price discovery and let it do its thing. That's why I trade 5-minute candles. This stuff plays out over time. It might take 5, 10, 15 minutes for this thing to decide whether it wants to continue in price discovery, all right? Once we have some acceptance, so distance up or spending some time out here, 15, 20, 30 minutes, All right, entry is going to be on the first back test of the band. Okay, and we enter on the first sign of strength afterwards. All right, we don't just buy it because it touched the band. All right, we're looking at order flow, the tape, and we're waiting for strength. Okay, once we do so, we'll enter long, and then obviously to the short side is also viable. Okay, our stop goes a few points below this candle. Okay, and we will be looking to either revisit the recent highs or just scalp a few points based on your stop. You can also enter these on the break of value, but you should always be prepared for a rejection. You know, there's a lot of people looking to fade this value area, all right, rather than waiting for the acceptance. That's a much more aggressive trade, and you're going to get stopped out much more. The stop will obviously go a point or two below your entry. All right, that would be a momentum break. Okay, have to have a tight stop because that thing can reject on you. You could get stopped out a couple of times trying to catch that break. All right. Normally, we need to let these trades breathe. Oftentimes, they'll set up to the tick, but many times they will also retest again, or they will fail like they did here. All right. The sub-value trap. All right. Pulling in a bunch of shorts, and then you bring it out and rip it. Right. So we caught the bounce to the tick, almost to the tick, pretty close. We did not get enough buyers. It retested, and then we got the launch. Okay. This trade plays out over and over again on a continuation trend day, but you can catch a couple of these on any given day. The next core setup is going to be fade value area extremes. So that's when we're trading in fair market value. Okay, that's where a lot of business and transaction is taking place. These are considered range days or balance days. All right, so we're not making a big move. All right, we look to fade the value area extremes. So the upper side of the band or the lower side of the band, all right, or any distribution on the volume profile, but I'm just focusing on VWAP for this video. All right, there are other setups with initial balance, and there's other setups with the volume profile to give you much more setup opportunities than just the VWAP bands. Okay. The setup criteria is this: price has obviously been spending a lot of time within the VWAP value area. All right. Must show price acceptance, time or distance inside a value. So we've been in here for a while. We've been trading here for, a half hour, an hour. We've traveled well into value. Okay. We're not just like down here at the band. Entry is on the first sign of weakness or rejection on test of the VWAP deviation band area. All right. Now these sometimes play out to the tick. Sometimes they do not. Sometimes they pierce and reject. All right. There's no perfect execution here, guys. This is where I talk about precision isn't the goal. All right. The goal here is well-reasoned and educated trade locations. Okay. Not precision. All right. You can get into the touch or scale in at the proximity. If you're trading micros, as you approach the band, you can start with 1, 2, 3, 4, 5, 6, and if it keeps going, you stop out. Okay. So you can get a better price with micros. That's a whole nother strategy. Okay. Stop goes a few points above or below the testing candle wick. All right. Unless you're doing the scale in, and then you need to have a dollar amount or get out on a momentum break or a stop run. And these setups can have tighter stops. Like I just said, a strong break or even grind through VWAP band is just a sign to get out. Okay. So, and as you have experience watching order flow and how buyers kind of prop the bid to push these things to this levels, you'll have a better idea of how that works. All right, here's setup number 3, the VWAP Wave setup. Number 3, return to value. Okay, this is where we return to value. As the setup says, we've been in price discovery and we break back into the value area. All right, after spending some time and distance outside in price discovery. Entry is on backtest pullback of the VWAP deviation band after price breaks into value, shows acceptance, so we spent, 20, 15 minutes in here, okay? Or we go a pretty far distance in like we did on this candle. All right, then we retest the band. That's our entry on strength or weakness in the reverse if you're coming in for the band. You can get in on the break into value, okay? But again, be prepared for rejection. rather than waiting for acceptance. Obviously, this is the lower probability setup, where the A plus setup is the break, acceptance with distance or time, and then the pullback, enter on strength. That's A plus. The stop goes a few points below or above the testing candle, okay, wick. And oftentimes these will not back test. So the only setup you would have had was the break into value, like this one, okay. And our last setup is going to be the VWAP bounce, okay. The VWAP bounce, I say that most times trading off of VWAP is not a good idea. VWAP plays a better magnet than it does a trading level, except in a trending day or a high volatility day with price going in and out of value on a trend. Okay, entry is on first test of VWAP after price breaks into value. Okay, so if we travel from outside value straight to VWAP, all right, after we've spent a little time out in price discovery, that's the spot. And we also have a price continuation set up right there. Okay, beautiful one. All right. So after test of VWAP, we enter on strength and direction away from VWAP, so long or short, depending on the direction. The stop goes a few points below testing candle, all right, of the VWAP. And these are called sub VWAP traps. So it breaks through VWAP. Sometimes it'll even spend a little time up here and then fail back through. It's a trap. They're getting people, all the longs, see the break of VWAP, they're getting in here, and then they tank it, right? So they trapped all those longs. Okay, so you got to be careful of sub VWAP traps, all right? A nice way to wait for the break and the failure. That's a good time to get in. VWAP can be a choppy spot where big players are getting in and out. Expect traps and games here, like a VWAP break and reclaim and other stuff. That's a sub VWAP trap that I had just discussed. Okay, so guys, these are my 4 core setups that I trade each and every day. All right, this guide you can download in the description at the link below. Please download it, start looking at it, and start back testing and forward testing this, guys. You're going to see these strategies play out day after day after day, particularly on the VWAP bands, but you'll also see the same behavior with the initial balance and the volume profile. So I merge all 3 onto my chart, and I get a ton of setups, scalping setups, based on this mix of tools, all right? And all follows those setups, okay? So be sure to subscribe if you aren't already, all right? I do have a vibrant community of traders. We do group coaching. I trade live every morning at 10 a.m. to about noon. All right, trading this exact strategy on futures contracts. I also trade it on stocks, but I don't do that on live trading. That's just another thing I do. And I'd love to have you, all right? Have a wonderful day, traders. Manage your risk out there. Stay sharp. I'll see you in the next video.